We'll be starting up here in just about 30, 40 seconds. Let everybody log in and we'll get started. Okay, good morning and welcome to the first of our 25, 26 winter webinar, whatever, foundational webinars. Yes, my name's David Orr. I'm the director here with the LTAP Center here in New York State. We're part of the Cornell Local Roads program and all the fun stuff that we do. Today we're going to be talking about budget basics. We'll be doing polls, having a little interaction, hopefully having some fun. If you haven't been on one of these webinars before, make sure you look at the bottom of your screen. There's audio settings if you have any issues. Open up the chat pod. That's important because that's how we will send you a link to a handout that we've got, plus if we have any other messages for you, links to the polls, things like that. We'll put those in there a couple of times. I may ask you to raise your hand now and then, and definitely want to have that Q&A pod open because that's how you can put in questions. If there's questions about the audio or sound or something, you can do that. Also, if you have questions for me, I really do want your questions throughout the hour we have together. Now, this is worth one PDH, Professional Development Hour for engineers here in New York State. It is only the person registered who gets those. It's technically a course. However, that's not as required as it used to be for keeping your engineering continuing education up. If you're from outside New York State, I usually say check with your LTAP center, but this one's actually pretty New York specific. It deals with New York State law issues, which is why it's worth a PDH. Probably not as useful for you if you're outside New York State, but we'll see who's visiting. There are some things that are general and universal. So let's first start with a bit of a welcome, and I'm going to be using these polls, okay, to do this. So everybody get ready. We'll do a few polls. First one is, who do you work for? Are you with a town, a county, a city or village, state or federal, tribal, an MPO, a consulting firm, a contractor, or you're just working for the weekend? Let's see what we got here today. We've got quite a few county. We've got quite a few state or federal. Okay, that's good. Okay. Just let everybody do that one real quick. Okay. Good variety. I like it. I like it. And I got a few folks who just put in the letters in the Q&A. If you can't access a poll, you're welcome to throw it into the Q&A. That will be helpful as well. Okay. Good variety. I like it. Okay. What's your job? That's the next one. And that is, are you an administrator? You're the highway superintendent / commissioner? If you're a deputy, put it there too. Are you an engineer, a planner, field crew, supervisor, board member, whatever the boss tells me to do, or none of the above? We'll see what we get here this time. I suspect, and I'm right, it's a lot of engineers, hoping to get their PDHs, but we also have quite a few superintendents, some administrators, and we have at least one or two people who are whatever the board tells me to do. That's cool. Okay. Now, how long have you had your current position? Not how long have you worked with your agency, but how long you've had your current position? Less than a month, less than a year, all these different things. I'm going to let you put the answers in, and then I'll give the responses to you. Let's get that. Let's see how this one goes. Okay. And again, you can throw those in to the Q&A. I've seen some folks who are in the 6 to 10 and 11 range. Okay, let's see what you got for responses here. All over the map. Oh, I like it. That's actually good. We get folks who are a couple who are literally starting on the job training with budgets. Okay. Um, okay, it's good to see. Good variety. Thank you. And then where are you from? So where in New York State, and of course outside New York State, are you from? And if you're wondering why we do this, partly it's because we'd like to know where you're from, but also it does help me quite a bit in terms of what I might focus on. Okay, so we've got quite a few downstate. We got somebody from New Jersey. And again, some people are putting in, there's Fishkill and Putnam and a few things like that. Okay. Okay, cool. Thank you very much. This helps me quite a bit. and we will go from there. Okay. So this webinar series that we've got, we're starting with budget basics. We'll be taking off next week because of Thanksgiving week, but then we'll be back up in December. We have three upcoming sessions on the MUTCD, legal issues, and asset management. Then we'll be going in January and February, and we actually go through March with the Y webinars before we start our spring workshop series. And our spring workshops, we're doing everything from well-rounded roads, though we don't have the date set on that yet. We're still finalizing some things. It's an updated version of Complete Streets that includes rural and urban areas. Drainage, local roads done right, pavement maintenance, rights and responsibilities, and I want to highlight running your highway department because a lot of the materials we're talking about today come from that workshop and another workshop we have on dollars and cents, essentially budgeting. So obvious ones. And those are in your handout. And again, if you've opened up your chat pod, there's a link to that handout. If you can't access the handout, because say you work, there's a firewall in the way, just email us via the Q&A and we will send you a copy of the handout. Okay? Now, today we're talking about budgets, and there are different types of budgets that we can talk about. And depending on how long things go and how many questions you've got, we'll get through as many of these as we can. We absolutely need to talk about your annual physical budget, okay? The budget for your department. That's going to be critical. Now, part of this is there's operating budgets and capital budgets that go hand in hand with that. So there's things we're going to be looking into. And then again, depending on how much time we've got and how much detail we can get into, we'll talk about project budgets. But we just got 1 hour, so we're going to highlight the important stuff. Now, we'll come back to this calendar a little bit more, but there are certain dates that we need to be aware of, and hopefully everybody knows their dates for their annual budget. If you're with a town or a county, it's by state law, it's January 1st through December 31st, i.e. a calendar budget. Villages, with a few exceptions, there actually are a couple of exceptions, but it's June 1st through May 31st. Some charters that are slightly different. And cities, typically the most common is January 1 through December 31, but that can actually change with your city's charter if you're with a city. So that's something to be aware of. And then again, this is linked in the handout. But one of the more critical things I would go look at is the state comptroller has some really good documents, and one of them is the accounting and reporting manual. So you can understand some of the things we're talking about today and dealing with the budget. Now, in terms of budgets, let's just remind everybody of ownership. There's about 130,000 miles of roads in New York State, centerline miles. Over half of them are owned by towns. Together, all of the local agencies own about 85% of the overall mileage. This particular one only shows municipal ownership. It doesn't include private and quasi-private roads such as the New York State Thruway and roads like that. But as you can see, there's a lot of miles. And of course, everybody has different responsibilities that they have to deal with, ranging from the typical kind of things you would expect to see, such as snow and ice control, signs, roads, things like that, and bridges and culverts, and all kinds of fun stuff, and we'll come back to those. But there are other responsibilities that are outside of the highway budget. We're going to focus on the highway budget today, but obviously that's an important part of the process that you have to deal with. Now, when it comes to highway funding, different levels of government have different financing. Okay, so for instance, with towns, about 99% statewide average of the funding comes from either local or state dollars, mostly local dollars. And we'll talk briefly about the sources of revenue and where funds come from. Small amount is federal, and again, we'll come back to that a little bit. But it's important to understand the budget because so much of it is dominated by local sources of funds, and certainly we want to make sure the locals are given the best bang for their buck. So let me ask this question. First poll that we're going to have, I know my budget. If I just say I know my budget, and you can say yes, somewhat, not really, or I don't like those answers, I'm going to put none of the above. If you click on none of the above, please give me what that really means in the Q&A, and I'll let you vote, and then I'll see what the answers are. Give you about 15 seconds, and I'll get a sip of my coffee, which I keep forgetting to drink. And by the way, in the Q&A, I see some somewhats and some not reallys and a yes. Okay. So let's see what we have for results. Responses are, ooh, that's good. Half of you say yes. About another third of you say somewhat. Hopefully that means you know the highway portion at least. Some say not really, and then none of the above. And again, let's see what that is. If I get somebody who tells me what that means. None of the above. Okay. Well, you should know your budget. And you should know your budget as detailed as possible, understanding all of the nuances. Otherwise, you may not understand how much money you really have or don't have in a particular line item. Now, you can go download. Most budgets are online these days. I went ahead and downloaded, just as an example, uh, the budget for the town of Ithaca, which is where I'm standing right now. I'm actually in the town of Ithaca, not the city. The city boundary is that way about, 500 yards. Actually, probably about 300 yards, actually. But there's parts to the budget. And now don't try to read this. What I just want you to realize, go down, find the budget, and let's talk about what does all this mean. Okay? Budgets have a procedure and a setup, and we'll come back to the numbers part of it in a little bit, but I want you to understand these line items. They're pretty important. And so budgets should have account funds, a ledger code that goes with those account funds, and then an object code, a specific object, and we'll talk about all three of these items. Now remember, we're focused on the world of highways and public works, so the accounts you need to be aware of. And if you aren't aware of these, you need to go do a little digging. One is the general fund, the A fund. This is controlled by the board, okay, at whatever level, county, city, town, or village. And this is for general funds. Now, if you're with a town, the highway budget for a town is going to be either a DA or a DB. DA means it's the entire town. Certain charges get charged to the entire town. And DB means part of the town. That's i.e. the parts that aren't the village. Because if you're in a village, you're also in a town at the same time. So I'm going to ask some of you to raise your hand if you are with a town, or if you want to, you can raise your hand. How many have a village within your town? How many have a village within your town? Raise your hand. Okay. If you have a village, an official village within your town, you will have a DA and a DB account. And we'll talk about which items get charged to which here in just a minute. Okay? So, yeah, about 10% of you. Okay. Now, if you're with a county, you're going to have two accounts, a D account that's your road account and your DM account, which is your machinery account, and they are different. Okay? The thing I want you to, the takeaway message here is that if you've got a DA, DB for town or DDM for county, those funds need to stay with those accounts. Okay? We'll talk a little bit about what can and can't be done transferring funds, but those are specialized accounts. They've been pulled from the general fund, which the board has control over completely. The DA, DB, D, and DM are set up by the board and then are spent in the proper way through the proper authority of the highway superintendent. Okay? Now, you may have other funds. There's plenty of others out there, including one that I don't see used enough. I think it probably should be used more often. That's for capital projects, where you can take projects and pull them out of other things like building a building, a major bridge, something where you're doing a lot of federal aid. You can use a capital projects and track those charges more closely and make a better job of communicating with the public. So again, I'm going to ask you to raise your hand. How many of you have or have used in the past capital project funds, separate funds? Let's see how many of you have. And again, it's a very good communication tool. It's a good way to keep separate a special project. And it's a good way to make sure that everybody's on board, realizing that we got some extra funds so that our long-term budget for the DA or DAB, DB or D and DM accounts is fairly consistent. This is just a special project outside that. So that can be fairly useful for you. So, and again, about 15-20% of you. That's pretty good. Okay. Now, in terms of codes, I'm going to show you the town ledger codes only just from the standpoint of time, but I just want you to understand that there are also going to be similar ledger codes for counties and for cities and villages, The difference is what fund they might come from. Okay? The ledger codes are still the same. So the administration is ledger code 5010, and that's always going to be a general fund charge. That's where the highway superintendent, the deputy, any clerks that work for the highway department work out of. If you're with the village DPW, that's where you'll pay the superintendent or commissioner, whatever the title is. They come out of that line item. Okay. There'll be engineering. Engineering actually comes out of the general fund. Okay. Unless it's tied to a specific capital project. And you can do that. You can put it over in a special capital project. But generally, general engineering is a account. Buildings and garage work, that's also general fund. That's, again, an A account goes with the budget with the board. Signs, one of these weird quirks, traffic signs, the cost of the buying of the signs and materials is actually a account item. The placing of those signs, however, can be put into the D account as part of the general maintenance activities, general repairs. Okay, it's one of those weird quirks because remember, town boards have the control over authorizing signs, so that's why it belongs in that fund. Now, if it's a county would be slightly different. With a county, that would actually be a D account. Okay, it would actually fall because the highway superintendent, the county highway superintendent, has that authority. So you have to be aware of slight differences that exist between the different levels of government. Now, general repairs, again, for a county, it would be D. For a town, it's DA or DB, depending whether you have a village or not. Okay. For villages and cities, that would actually be an A fund unless they set up a special fund for that purpose. Capital work, again, if you have a village, it'd be DB. If you don't, it'd be DA. And that all of the other items that are listed there are considered all town. That includes bridges, because bridges are controlled by the town in both the village and outside the village. Equipment, brush and tree, snow and ice, and working with other governments, those are considered town-wide charges in most cases. So they fall into the DA account. And again, if you're not sure, the main thing here is to be consistent. Talk with people, okay? There are ways you can move things around if you want to. So for instance, you could put your culverts under your bridge account. That's actually considered okay. Again, it's a communication tool more than anything else, so everybody's on the same page. The one thing to realize is once money is allocated to go into the DADB account or DDM for a county, they stay there. They don't come back into the general fund. You can't take money from a special fund, and DA and DB are special funds. You can't move it back into the general fund with a couple of exceptions short term. And we'll talk about that briefly. Now, I got a couple of questions in here. And again, I want you to ask questions. Would you put signs and striping together? Yes. Yes. Signs, striping, anything MUTCD related, which includes signals, by the way, falls under that same ledger code 3310 and would generally fall under the A fund. And again, it's who has that overall control. So yes, it's actually any MUTC stuff. We just say signs. And then signs belong in the general fund. Okay. But the placement of the signs, the actual installation is considered a general repair typically under most towns. Okay. Could they charge it back? Yeah, most don't. Okay, for towns. And in a county situation, the county does have a D account, which signs go into that. So it's again slight differences between counties and towns, cities and villages. Now there are object codes. All of these are the major ledger codes, but within each of these, there are a series of object codes. And these are the object codes that are pretty much almost always used the most. Now they can have numbers behind it if you want to get more specific, and a lot of budgets have this, but they'll start with the same number. So it's personnel cost starts with point 1, equipment and capital expenses, i.e. long-term things, point 2, contracts with other folks where you buy things short-term, non-capital, that's point 4. If you've got a loan or you've got a bond or something where there's principal, you would have the principal technically should be out of point 6 and the interest should be point 7. I've looked at several budgets where they don't break those apart. That's just mainly to help people understand what your value of your loan or your bond is. And then benefits, point 8. They can be in the exact same ledger code. They can be separated. I've seen both. Main thing is make sure we communicate it. We understand that if it's employee benefits for the highway employees, that it's really a highway charge. It really belongs in the D account, not the A account. Okay, that's the one place where I wish we would be more consistent, mainly just so we can compare apples to apples between agencies. Okay, so that's something to think about. Now, let's just do a couple of quick questions on this. Okay, so what ledger account do you think this would be? You can throw this, and yes, there's no point 3 and point 5. They were used for different reasons in the past for different things. Do you think it's an A account? Okay, that's a budget, and then the ledger account would be the specifics below that. In this case, oh, someone looked at their handout, 3310, very good, nice job. Okay, so that's a pretty easy one. Okay, how about this one? Which ledger account? If you want to just put the budget, that's fine. I'm good enough with that. I just want you to be thinking about these things. Okay. Let's see if anybody wants to guess on this. Somebody's being a little outside the box. Typically, most municipalities across the state would throw this in their repair, 5110. And for a town, that would be DA. For a county, it would be D. In fact, this is actually a county structure, so it'd be D. But you could put this under bridges, even if the span is under 20 feet, so that you could track all of your structures in a single account. And some agencies do that on purpose. And some counties that maintain all the structures above 5 feet, such as Wyoming and Genesee, actually will have a separate line for those kind of things so it can track it. Okay. How about this one? Which ledger account? This is a chip seal. Okay. What do we think? Be asphalt, yeah, but is this the general repairs? Yeah. So it's typically it would be uh, DA if you don't have a village. If you do, it would fall under the village category of stuff. So it could be DB if you've got a village. Repairs. Let me just briefly mention the idea of capital. Okay. Now, capital should be reserved for things that have a 10-year life or longer. Okay. If you read the comptroller's stuff on this, so there's some arguments they even have different dates in there. But a lot of people, their CHIPS funds, they keep in their capital line item. And so they keep all their CHIPS funds, and you're allowed to use CHIPS for chip seals on every 5-year cycle. That, that's fine as long as everybody's on board with what is going into which line item. So there's good communication. Okay, we can make that work. Okay. Now, which ledger account for this one? The machinery would be an equipment line item. Yep. Okay, so that's good. How about the plowing itself? Well, that would fall under snow and ice. And that's a town-wide charge, typically. Okay. So again, think about where you put your budget up. I just want you to understand this. There's a couple, though, that create some chaos for people. Let me give you one. Let's say that you're out mowing the town hall. Where does that fall in the budget? What budget does that belong in? What ledger account? It's a building ledger account. Very good. Which, by the way, if you're wondering, I'll show you the number in a minute. It's 5132. Ah, there we go. Somebody's got it. That is a general fund charge. Okay, that's the real take-home message here. If it's not highway related, it belongs in the general fund. Okay, so that includes any buildings and grounds work that's being done, that's any buildings and grounds work. Even the highway department buildings and grounds technically is an A charge. But absolutely, if you're not doing something highway related, it should come out of the general fund, or if there was a parks budget, the parks budget should not come out of the highway budget. Otherwise, if we think we've got $400,000 in the budget, but we spent $20,000 doing outside work, we really don't know what the actual highway department budget is. So what really should happen is the A fund should reimburse the highway fund for the cost of that work. Okay? Now, do a lot of towns Don't transfer it if it's a small number. Yeah, they do. But technically, we should be transferring it. Really belongs as a non-highway cost. Okay. So I'm just going to see what y'all come up with. We're going to build a Wordle. This time I'm going to do the Wordle. Actually, I'll tell you what. I'll just let you put word numbers come in here. I'll let the answers come in here. One word for why we need to know the budget codes. If somebody says, why do I need to know these? What word comes to mind? Let's see what word should come up with. Tracking. Oh, I like that one. That's good. Responsibility, accountability, compliance, accountability. Yep. Consistency, knowledge. Ooh, good choices. Good words. Auditing purposes. Yep. Okay. Could be your budgets, knows what your available funds are. Yep. Okay. To me, the word I would use is communication, but these are all related to that. It's a communication tool. It helps make sure we're all on the same page. Very good word choices here. Now, somebody here says, why, give an example of why higher equipment would ever come out of 5110. Now, if we remember, 5110, if we go back to our ledger codes page, 5110 is general repairs. Equipment has a 10-year life or longer, really shouldn't be coming out of general repairs. That's not a general repair item. There's a specific line item for equipment that you're purchasing. That's 5130. Okay, and again, if you were at the county, you'd actually have a separate account, DM, for that purpose. And you can set up an equipment fund. A town can do that. But really, if you think about it, anything that's got a longer life, we should be putting into longer life funds. So it should really never come out of general repairs for larger equipment. Now, if you're buying something that's got a 1 year life, like a pump or something like that, that could come out of general repairs. But typically, things with long life should be coming out of equipment or capital repairs. Okay? Now, payrolls and vouchers. So this is a monthly responsibility. So we've got our budget. We're starting to understand it. We have a monthly responsibility. Who fills out the vouchers? I'll let you put in who you think fills out the vouchers. Who fills out the vouchers? Give you about 15 seconds to put that out. Okay, let's see what y'all come up with for answers. Okay. Most of you put down clerk. That's why it says bright, but you got crew leader, supervisor, superintendent. Yeah. Okay. The vouchers can be created by a clerk. Okay. The vouchers can be created by the highway superintendent, especially if they don't have a clerk. So you need to know who's filling it out. You could have a treasurer. Okay. Here's the thing. There's two signatures required. No, not who creates it, but who signs those vouchers. The department head signs every voucher, i.e., who has control of that particular budget. In the highway case, it would be the superintendent should be signing the voucher. A second signature is required, somebody on the board. Okay? It could be the alderperson or the mayor, whoever they set it up within a village and city setting. It could be the head of the committee for a county, for the highway committee. And in the case of the town, it could be the town supervisor or, again, somebody that's been authorized to sign that. Two separate signatures are required. Okay? They should not be within the same level within the government. So you can't have one board member sign the voucher and another board member approve the voucher. It really needs two separate signatures. And that's important for not only communication, but compliance. Okay? Now let's say that it's all been signed and you realized, oh my goodness, we've messed up. We messed up and we should have had a different ledger code or even a different budget. Can you change the codes afterwards? I'll go ahead and let you see each other's responses. Can you change the codes afterwards? Yes, no, depends. Technically, it is depends. It does depend on the situation. Once they've gotten to a certain level of authorization approval, if you're not catching them soon enough, really hard to change them. However, we should make them correct. Just saying, oh, we can't change them because they've been approved. No, you can change them. You can go back. You can update them. You may even have to do some budget transfers. Okay. The thing is, you need to make sure you get it right. Now, I got a note in here about what happens when the town engineer signs the voucher. Well, the town's engineer could be one authorized to sign a voucher. They could do that if they've got that power being delegated to them. They would be considered the department head in that particular case for the vouchers thing. But codes generally depends. Um, you should change them if there's a need to, and more importantly, make sure the money comes out of the right budget, and that might require a transfer. Okay, and no, the accountant cannot change them after they've been signed. If there is a change, if you need to change an account or you need to change the code, that has to have those same two signatures. Okay, you still got to have a couple of people involved. Okay, otherwise, there's chaos. And we should not be doing that. Okay, that's the kind of thing the auditors tend to look for. Now, let's go back to the type of budgets. We've been talking about annual physical budgets. Okay, there's also going to be within that budget, there's an operating and capital budget. I'll come back to why those are separate here in about 10 minutes. And again, depending on what time we've got, we'll briefly touch on project budgets. Okay, we could do a whole webinar on project budgets. Now, in terms of the annual physical budgets, while we know it, there's a cycle, and every single municipality has about the same cycle. It just changes based on either holidays and when the fiscal year starts. So about 4, maybe 5 months out, the department should be preparing the final budget to submit to the budget officer. Okay? Sometimes that's the town supervisor, sometimes that's a budget officer for a county, it could be the mayor. 3 months before the end of the fiscal year, before the next year starts, we need to have a tentative budget and then a public hearing. I like 2 months. The law actually allows a little later than that for towns because a month out is the latest. You should be adopting a final budget and then start the fiscal year. So for a town, as an example, that 4 months means that by September 20th, by law, there has to be a tentative budget submitted to the budget officer. Okay, and that has to be approved by September 30th. That's only 10 days. It's really not enough time. We really probably need to give more time than that. That's the minimums. You can always go more. Now, there's an asterisk there because in Westchester and Monroe counties, they get to do it later, which I think just squeezes everything, but that's just me. And again, that's required, not what you might want to actually do. There has to be a public hearing no later than the 15th. It can be earlier. It does not have to be that late because the final budget is adopted only 5 days later by rule. And that, again, not a lot of time if there's a problem or if there's controversy. So again, these are the absolute latest dates. You can do them sooner, but remember, you got to start January 1. Okay? So let's just ask it. I hope this is an easy question. When should you start working on next year's budget? Let's just, for the sake of argument, say you work for a town, just so we have fiscal year starting January 1, just for the sake of answering this question. Okay, let's see what y'all came up with. Survey says, and yes, it might be February for a village. September 1, that's the minimum. August is much more common. I like July. And as soon as possible, yeah. And actually, truth be told, if you'd said none of the above, in other words, you're always working on the budget, that's probably a good answer too. The key is there are dates when we have to put things down, but we're always thinking about the cost and the budgets and things like that. Now, in terms of required reports, agencies can be asked to provide a report to the board. There is one place where it's required at the state level, the state law 284 agreements for towns. And that's an agreement for the expenditure of monies between the highway department, i.e. the superintendent, and the board. Okay? That's for general repairs and permanent, i.e. capital improvements. Okay? And we'll come back what goes in that report, but just let me ask you, Who signs the 284 agreement? You can select all 5 of these choices if you want, though if you checked all 4 plus none of the above, that would be odd, but you can do so if you'd like. Let's see what y'all come up with. You got the county highway superintendent, the town highway superintendent, the town supervisor, and a majority of the board. You know, if you got a board with 7, you'd have to have 4 signatures. That includes the supervisor, or 3 in the case of a 5-person board. And you can put more than one answer because the answer is more than one of these. Let's see what y'all come up with. Okay? Okay, let's see what the responses are. And I see a few over in the Q&A. Okay. So the answer is absolutely the town highway superintendent. The town highway superintendent does have to sign, and yet the quirk of percentages is just the quirk of our polling software. The supervisor does not have to sign it. The supervisor can disagree completely if a majority of the board signs. Okay? So as long as you get the highway superintendent for the town and the majority of the board, that's it. The county superintendent does not need to sign. That is something that is a remnant. It used to be. It is not true anymore. Okay? And yes, the supervisor does not have to sign. Typically they do, but really it's going to be the town highway superintendent and a majority of the board. Okay? Now, if you want a copy of that, we have it on our website electronically in a Word document. You can update it. Okay? So it's just the town highway superintendent and the majority of the board. And what goes on that? Well, the general repair portion, most towns that we talk with keep that relatively simple. You essentially put in the amount, and maybe the superintendent comes back in May or June before the construction season gets going to list what we're going to spend that money on, because things change. And the capital repairs, absolutely you should lay those out in more detail, and we'll talk in a minute about what happens when things change. Okay? Now, somebody asked, what happens when they refuse to sign? Well, technically, you can't spend money on general repairs and capital improvements. So you can clear brush and plow snow. Those are not part of the 284 agreement. That's it. Now, do most agencies have a 284? Well, let's just ask. How many of you, raise your hand if you're with a town in one form or another. Raise your hand. Raise your hand if you're with a town. I know we did this earlier, but just as a reminder, raise your hand. Okay, and this is a nice thing about this is I'm not going to look at the names. I only care about the names. Okay, so I got about a dozen of you. Now, magically, watch this. My hands are up. Magically, all your hands are going to get dropped. Raise your hand for those dozen of you that raised your hands. You currently have a 284 agreement. Raise your hand if you have a current 284 agreement. That's about what I expected. It's about half of you. Don't feel bad. That's not uncommon. A little more than half have 284 agreements. It's one of those quirks that it is required, it should be there. It's a communication tool. It's not a contract. If they refuse to sign, the best I can tell you is to decide what you think is best for the town. But document, document, document. And make sure you've signed it. And if you feel you'd have to, you can plow snow and cut brush. Okay? Now, every year at the end of the fiscal year, the municipality is supposed to do something called an annual update document. This is sent to the comptroller's office. It's supposed to be done within 120 days. There are plenty of municipalities that are years behind. The cool thing about this, and the reason that it's important, is that we give then clear communication to everybody across the state so we can compare apples to apples. We can see what town A and town B are spending, city A and city B are spending at the macro level. So we know how much we're spending on transportation. We know how much money we're spending on parks. So it's a communication tool, okay? So that really should be there. And by the way, it helps your bond rating. If you've got these data up to date, you'll get better bond prices. Okay, so something to keep. Now, let's say you have a 284 agreement, or you have an agreement. If you don't have a requirement for a 284, that doesn't mean you don't have an agreement between the highway department, the DPW, and the board. Probably not a bad idea to have one, even when it's not required by law. But what happens when there's an emergency? What happens if you get a dam washed out, or if you get a major flood that damages a bridge, or you get a huge ice storm? Okay? It's not a question of if, it's a question of when. It will happen. So when that happens, what could you do? Well, the one thing you absolutely can do and should do, and for towns it's required, for counties and villages and cities, good idea, modify your agreement. That a 284 agreement is not a contract. It can be changed every single month. Okay? So change it if you need to. You may need to go get money. Somebody put in the Q&A. FEMA, you might need emergency funds. They might be available for a declared emergency. And if we had more time, we'd talk about sources of revenue. We're going to have one slide on that today. Okay? You might go look and see if you have some reserve funds. So raise your hand. How many of you actually have reserve funds you could use for an emergency? Anybody? A few of you. Okay. Okay. Yep. Possibility. You could do a budget transfer. Here's the thing. Every dollar you spend has to have a budget behind it. That budget has to have been approved. Okay, so you could do a budget transfer. You could transfer short term in any direction. You can transfer long term from the A account into things like the D account, into special funds. Or if you have a special projects fund, you could pull from that. Again, depending on how it was set up. Now remember, if it's more than $5,000, it has to have board approval. If it's less than that, there are ways it can be done internally. Know your budget. Okay. It will also depend on the type of municipality. But here's the thing with accounts. If, let's say, for instance, we had a barn fire, okay, highway garage burns to the ground. Now remember, that's an A account. That's a general fund account. And there's no money in the town budget to fix it or the county budget. The town can actually use the D funds, DADB in the case of a town, D or DM for the case of a county, to short-term cover those costs. They have to be reimbursed by the end of the fiscal year. Okay? So let's say the barn fire occurred today and you're in a town. You've only got 40 days or so to reimburse any funds if you did that. So that's a short-term loan. You can't make that long-term. Okay? So that's a risk. That's something you got to be aware of. And yes, if you have a fund, emergency fund, that's a cool way to use it. That's what it's good for, a rainy day fund. And again, that would have to be approved by the board. Are there other things to look at? Well, of course there are. There's working with other municipalities, there's shared service agreements, there's sources of fund like FEMA that was mentioned earlier. And again, if we had a whole day, like a class on budgeting, dollars and cents, we can discuss some of these alternatives for you. Now, I do want to spend a little bit of time talking about your operating and capital budgets, okay? And again, we'll just briefly touch on project budgets at the very end. The operating and the capital budgets are really two budgets that have to work together, okay? You need to have a little bit of both. You don't want to always spending the money on capital, but you also need to be doing some capital work. So they have to go hand in hand. And the way I actually think it's actually sometimes good to think about this is look at equipment. So imagine a piece of equipment. Now, obviously, that's a different ledger code, but it's still similar. There's going to be the cost of a piece of equipment. There's the cost of purchase. There's the depreciation and insurance over time. There's the maintenance cost. And then there's an annual operating cost, okay, which is theoretically a fairly steady cost if you're using it a lot. Okay? So the question always is, what's the balance? i.e., when do I replace my piece of equipment, or when do I change out things? Okay? Now, in a perfect world, we'd actually track the overall fixed cost, i.e., purchase cost depreciation, that slowly goes down per year, and an annualized basis, and the repair cost typically goes up, and we'd look for the low spot. To do that on a single piece of equipment, very difficult. But to do it on a whole fleet can be very, very advantageous and help you figure out how long to keep something. And you can do that for road work as well. It actually works amazingly well. So keep those things in mind. And then again, think about your sources of funding that can help spread out the costs. There's your local dollars, your tax dollars of different types. There's state funds, including CHIPS and EWR, Pave New York, Bridge New York. Some are allocations, some are grants. And there is some limited federal funds that are out there. And if you need to, heck, think outside the box. You could do private uh, things like that. So you could do private work, get funds, private-public partnerships. You can borrow funds with bonds, and even leases is a form of a borrowing of funds. So again, look at your sources of funding, and then you're going to be developing a good budget estimate. Now, when you develop your budget, and in a perfect world, we'd had this back in July for the towns and all that, but keep this in mind when you're doing your budget, and you can be doing it now. There are 4 different ways we see people do things. What do I mean by private funding? Somebody just asked in Q&A. This would be a private-public partnership where, say, for instance, Micron might provide money to help improve a roadway to get to their facility, or you might do that with a large capital investment, and those are private-public partnerships we could do there. But budget estimates, there's zero-based budgeting. We've seen historical averaging. Cost of living increase, just a very simple increase, and then life cycle planning. And let's just touch on these briefly so you can start thinking about that. Now, zero-based budgeting requires that you start from scratch each year. I don't recommend it for the entire budget, and unless you really feel confident, like our friend Mr. Hunt, who's now in Lewis County and their county administrator, it's hard to do for a whole budget. But it's not a bad idea to maybe pick part of your budget and do zero-based, just to check to see, are you really where you need to be? So let's say, for instance, you're looking at your salt budget, okay? So you just go through and you just figure out, what do we actually need? Don't look at what you've spent in the past, just look at what you actually need. And so you go, well, in our part of the state, we have 30 lane miles we have to maintain, and we need to do about 110 plow trips in a year. So that means 3,300 lane miles. And if I put down 200 pounds of salt per lane mile, which, by the way, is too much, but come to the Snow and Ice webinar for that, that's 660,000 pounds or 330 tons of salt. And then you go out, you figure out what the cost of salt per year is, and let's say it's only 63 because you got a really good price this year. You'd need to have about $21,000 in your budget. Again, can be done, can be very difficult to get good numbers, but it's a good thing to do once in a while on every activity that we do. Now, you could use historical averaging, which is probably the most common, by the way, that I see it going around the state, other than the wet thumb in the air method. And that is, you use historical trends and averages. So again, looking at our salt, and let's look at the last 6 years. Okay, we add all those up, we put them into a calculator, we take the average, and say it's 305. And so we would budget for 305. There's a risk with doing this, by the way. And this actually is something I always get concerned with when we're thinking about operations that are really close to emergency type operations. Should we be using the average, or should we be using the worst case? Both of those can get you in trouble. If you only use the average, what happens when you get over 305 tons of salt needs, which you get half the time in this particular scenario? So that's average is probably not enough for some things. On the other hand, using a worst case scenario of 360 tons, that's probably a little bit too much. So maybe look at the worst, the top 2 or 3 years or some percentage. So maybe you say, well, 305 is too little, 360 is too much. Weight that a little bit, maybe about 330. So you get year 2. You can have a couple of years when you're a little short, and you can modify things around for that. Now, what some people do, and again, this is easy, you just take last year's budget and you put in a cost of living increase, sometimes called COLAs. And certainly a lot of contracts have COLAs in them. And you can use the consumer price index or producer price index to adjust all of your line items by that amount. So back to our salt example, okay? You got $20,000 in the budget for this year, and everything you see says the price is going to go up about 5%. So your budget becomes 5% more, 21,000. Easy and quick, and by the way, very common. As a minimum, we probably should be at least putting in a cost of living adjustment. we were very fortunate for almost 15 years. The amount of inflation was so small that agencies were able to keep things flat. We're not in that mode right now. Um, and you need to know what those are. Even if they go back to being fairly low, you probably need to put a small increase every single year if you don't look at your budget. Now, in my mind, the first and last methods are my favorites. So the last method I want to talk about briefly is life cycle costing. And this means you calculate the life cycle of your equipment, of your road, of your bridge, of everything you've got. Now, that's a little more challenging with a operational aspect like buying salt. Okay, so in this case, I'm going to use a salt truck as an example. Okay, so let's get a new truck. And let's say we do a pretty good job. We get ourselves a really tight spec and we can get it for 300,000. Yeah, I know they cost a little more than that, but the math works that we can talk about real quick. And let's say we want to keep it for 10 years. And yeah, I know you're probably keeping it for more, but let's just do 10. Okay. Now, annually, you spend on operations and maintenance about $15,000. Okay, now that number is slowly going to increase over time as the truck gets older and older, but if you turn it in soon enough, maybe that increase isn't that much. And again, not counting for inflation, 15,000 is not too bad, which means you need to budget 25,000 per year per truck. That means 10,000 of that funds is your capital reserve fund for your truck and 15,000 for the operations and maintenance. Okay? So that's how much you need to have per truck. And you can go through and do that. You could do that for your roads and bridges. Steuben County many years ago set up a life cycle for their road system. They took every single road and figured out these types of roads need these kind of repairs. They added them all up and they get to a budget of about 5.9 million. They only had about 5.3 million. And the budget then had a huge deficit. But the cool thing is everybody knows what the deficit is. We know where the problems are, and then slowly you can work with the board to get that deficit reduced. Be honest, be realistic, and know that it's not going to be perfect, but it gives you a much better chance. That's really what we talk about when we're talking about asset management. And we have a webinar on that coming up in December if you want. But the idea is you go out, you do inventory, you do condition, repairs, prioritization, and implementation to develop this life cycle costing concept. Now, in terms of your inventory, you need to know all of the things you own, and it's more than you'd like, okay? And how old they are. And yes, I see in the Q&A somebody has a truck that's almost 40 years old. Do the math on that and see what your repair costs annually are. I bet you're on the uphill side of that curve. Um, we really should be looking at long-term cost to be best for everybody. Now, in terms of condition ratings, you can do something fancy, you can do simple, but you got to know the condition. And again, this is why we'd like to see in the asset management webinar coming up. Now, which budget methods do you use? Or do you use? You get to pick one this time. Let's see, which budget method do you use? I'll actually go ahead and let's just see the responses. What the heck? Let's see which method you use. Okay? Primarily. You may do a mixture. And I see a lot of people putting mixture. I actually like that, where you do a little bit of zero-based or a little bit of life cycle planning, and then you just do COLAs for the rest, as an example. That's probably the most common that I see going around the state. Um, Historical averaging is great if you've got the data, but do you have enough data? And I see a bunch of different answers, B's, C's, D's, and E's all over the place. Now, if you don't do any of those, if you put an F down there for me, throw into the Q&A what that means. Because if we've got a new technique, I'd love to know about it because we want to share and communicate with each other. Now, during the budget cycle, remember there are requirements for purchasing. This is something we need to be aware of. So for purchasing, you have a policy. You should have a policy for your direct purchases. For when you need to go get what's called an oral quote, even though you put it down in writing, that means you pick it up on the phone, but you document it. A written quote where you ask people to send you back, and then you're going to have bids. And of course, there's some exceptions to those bids. And if we had a whole day, we could talk a lot about these. Raise your hand if you have a purchasing policy. Raise your hand. Now, we have about 80 people on the webinar today, and I should have 80 hands coming up. Even if you're in the private sector, you should have a purchasing policy. What are your limits? When do you have to do which techniques? Because if you don't have that, not only is that against the rules for municipalities, but then you also, I don't know when you're crossing a boundary you shouldn't be crossing. Now, there are some limits by state law. Okay, about half of you raised your hand at the peak. There are some limits. Bids are required if you're doing a purchase over $20,000 or you're doing public works over $35,000. Now, I'll be honest, those numbers have not been updated in a long time, and they're probably tight for a lot of you. They were 5 and 10 at one point when I first started. So again, we can debate about what the amounts are, but we should be talking about what the limits are. By the way, this is not good crack repairs. It's nice, it's pretty hard, but it's not good crack repairs. But which of these items, and you can select more than one, and I'll let you see the responses, which one of these would be considered public works, i.e. you could spend the $35,000? Crack repairs, truck salt purchase, installing gas tanks for the garage, or guide rail installation? Which is considered public works? This creates some confusion because remember, the bid limits are different. If you're buying, here's a good way to think about it. If you're buying a thing, even if it's a fairly complicated thing, that is usually considered a non-public work activity. Okay? So the salt truck is not going to be considered public works. Okay? A salt truck is not public works. Installing the gas tanks for the garage is literally one of these classic debates that we have. Does that count as a purchase of an item, or because of the specialty of needing to install everything properly, that's really a public works activity? There are actually arguments on both sides. I typically would say that it's probably more like a public works, but I do see, and people do argue, and sometimes successfully in audits, that that's considered just a purchase of a thing, a goods, a commodity. But yeah, a truck would not be a public works. You're buying a thing, even if it's complicated. Okay? Now, we only got a few minutes left together. We've already talked about some of our budgets. I want to briefly talk about your project budget stuff. We just have a few minutes. Let me pick the couple of things that are really the critical ones. First off, when it comes to setting up your budget for a project, you can turn that into your annual physical or operating budgets as well. What you're going to need to do is look at everything that's involved and calculate the cost. Okay? That means you need to know your materials. You need to know your invoices. You need to know your labor and equipment, and that's your own labor and equipment. Always include your own labor and equipment. And the reason for that is simple. How do you compare whether you do it or a contractor does it? Okay? Now, if we had a whole hour, we could actually do a special webinar if there's enough demand on how to go through this whole process for doing project costing. Okay? Now, I will say, when you develop this, and this is true in your total budget as well, make sure that you have a contingency in there. Now, some people talk about a general overhead rate, like a 5 to 10% increase in your budget, but if you don't know something, it might need to be larger. What you don't want to do is shortchange yourself. Make sure you've included all the cost and realize you might miss something because you don't want to get it wrong. Okay? You don't want to get it wrong. And then the other thing, and this is true, by the way, for both your projects and for your overall budget, I call it the 3-digit rule. It goes back to the days of using slide rules to do the work. Stop giving me pennies. Now, there are times I actually have to do a budget in pennies. Our LTAP contract, I actually literally have to calculate it down to the closest penny. But do we really know that number going in? Or should we round up a little bit? I'm a big fan of 3 digits. So if you've got 1.62 million, that's good enough. Round things up a little bit. Give yourself a little bit of leeway because how do you deal with contingencies and things like that otherwise? Now, there's a process. You write out all the steps. You estimate the time to complete it. You calculate the cost, and you put all the steps together. The cool thing about that is you can do different activities and add them together, like work zone activities versus the actual putting in of, say, a driveway. But again, make sure you've got a good process and have a driveway or a road or a bridge that you'd feel good about at the end of it, as opposed to this one, which is almost completely useless. Okay. Now, in terms of types of budgets, I hope we gave you some good stuff for physical budgets and operating budgets and capital budgets. If we had more time, we'd talk a lot more about project budgets. A lot of good things out there. We hope to see you on more of our webinars through the winter. Asset management is coming up on the 16th, and revenues, grant, state aid, federal aid, stuff like that is coming up in February. And as you can see, there's plenty of other good webinars. And later on, you can come visit us in the spring with our spring workshop series and running your hybrid apartment. Go online, nysltap.org. You can send me an email at david.org@cornell.edu. You can search for us. Our goal is to help you. And if we've done something today, then great. Everybody have a great week. We will see you in a couple of weeks for the MUTCD. Have a great Thanksgiving, and bye-bye.